That's what I'll say.
But I can't afford this, bro. It's expensive. I got to pay these guys.
100%. So, that's a good question. Probably go on YouTube, but all right, here's what I'll say. From an income perspective, if you gross 6 figures, you really should start looking at a planner.
Okay. Gross 6 figures.
Gross 6 figures.
That's a good segue. A lot of people be like, you spend this money, I buy camera equipment or lights or whatever. They're like, you can write that off.
Yeah.
But when I hear that, right, not knowing anybody, and I'm still trying to understand it. So maybe you can explain to me. People say you can write it off as if you get the money back, like as if you're working for a business. You know, at the end of when you work for somebody, at the end of the year, you get like a refund check.
Right.
But I'm learning that in entrepreneurship, you're not really trying to get a refund check. You're just trying not to have to owe anything.
Right.
So when people say you could just write it off, it ain't like I'm getting the money back. It ain't like I'm getting it for free. I still pay for it. I just don't have to pay taxes on it. Yeah. Can you explain to me, like, why do people have this misunderstanding of writing things off? Like, what? Why? I'm sorry, messing up the question, but explain that to me. That whole notion of you can write it off. Like, what does that even mean? I'm still paying for it.
So I think it's two things. First of all, the write-offs mean that we're able to take a deduction on our business for whatever expense that we had toward our business that reduces the amount of money we have that's profit, because from the profit is where we pay the taxes.
Okay.
It's the simplest way I can explain that, I think. Where people have the misnotion of the mindset of like write off dollar for dollar is because we're used to receiving from the government rather than giving. So when I'm switching from I'm getting refunds, like my family and I, we normally get refunds. We ain't thinking of it. I do my W-2. We got a couple kids, whatever. I'm normally receiving refunds every year. Now I'm switching from refunds to now I'm making money. Now I'm owing. And so we have a hard time grasping the fact that you will owe. So they think, people say write off, write off, write off. The thing is we're expecting to receive something from the government. When we become a business owner, it just puts us more in control of what we tell the government they should receive. And that's how you want to look at it. Okay. When you look at it from the cash flow quadrant, an employee, you don't get a choice in what happens with your money. I'm making X salary, $40,000 a year. Before I receive my net pay, I'm paying out Social Security, Medicare, federal taxes. That's the only thing you get to choose whether or not you want to do it by going exempt or not. And then, of course, if the company comes with some type of benefit, so medical, dental, all that other stuff, or retirement. Then I receive, after I paid all that, then I'm getting money. When you're an entrepreneur, if I do a transaction with you, you're getting all your money right now.
And I got to choose to pay.
And then so you're going to get all your money right now. Let's say, whatever the transaction is, I'm giving you $2,000. You're going to directly get $2,000. But now you get to say, well, I got $2,000 from Tariq, and it costs me $500 to get the venue. It costs me another $500 to get the camera, right? If a camera was that cheap, right? Another $500 to get the camera. Now I'm left with $1,000. That's my profit. So that's what I'll get to pay taxes on. But then if we do this early enough, you might say, $5,000, 5 different transactions of profit and $1,000, we got $5,000. Now I might say, well, I don't want to pay taxes on this money. How can I control and keep most of this money without giving it to the government? Now I'm going to look at, well, can I invest in a new camera because it's going to benefit me? Can I hire somebody because I need the help?
But hold up. If I invest in a new camera, and this is where I guess I get confused at. Yeah. Because people say this, write it off. So what is it? Frivolous? Like, I don't know the exact word, but they say it so loosely as if, again, it's free. Right. I'm still paying for that new camera. You are paying for it. So if the cameras that I have now works fine, I'm buying a new camera just so I don't have to pay taxes on $5,000. But now I still spent the money. Right. It's the upgrade, but I still spent the money.
Right, 100%. And so that's where planning comes into, because planning might be different for you than it is for me. And so if it doesn't make sense for us to buy a camera, then let's not buy the camera. So with that being said, I'm also an advocate, especially for Black businesses, as early as we can figure it out, is profit. Warren Buffett said $1 profit is better than no profit. So if we got to pay the taxes at the end of the day, then pay the taxes, because your business look better being profitable when you're getting ready to do stuff that you want to do, like buy the house. Another thing would be what is it based off my business making profit that I can benefit from personally. This will be things like retirement accounts. So I get to shift income. It's still my money. I may delay it or I'm a delay the taxes on it, but I still get some type of control for it. So the planning will work. It will be different based off the business and what you're trying to do. Because I'm not a fan of like we just gonna buy stuff just to buy it. Because now you still got to either service it or if we get a car, you got to pay the note on it. So if it don't make sense, then don't do it. Right? If the glove don't fit, we must have quit. That's how I would.
Okay, because I understand investing things into the business, like maybe hiring people that can help your business scale, right? Yeah. But still, when you hire people, you make more money. Or you got to pay them too, right? Yeah. But then even if it works, I'm saying, let's say it works. Yeah. You hire them to make more money.
Yeah.
You make more money, you got to pay taxes on more money.
Yeah.
So it's like we in this rat race or this hamster wheel to try to save on taxes when we're still going to have to kick out the money somewhere to still pay the taxes. And that's when things like, you said maybe invest in like a retirement fund. Like, so I've been looking at something called a Roth RRA.
Yeah.
So that you don't have to pay taxes on.
Right, but with the Roth though, you have to be careful because Roth is after tax is an after tax contribution. Meaning, let's say I work at a job and my net check, right? So if I get every 2 weeks I'm getting $1,500. That's out of that $1,500, that's what I'll contribute to a Roth because I would have already paid taxes on the money I received.
Okay. But
Makes sense?
Yeah, but when you're an entrepreneur.
When you're an entrepreneur, you not paying taxes on that unless you are on W-2. And so now you're the net money that you put yourself on, you put it into a Roth. As an entrepreneur, what you'll be doing is you'll be investing money in, and it'll be into pre-tax qualified accounts. So it'll be like your solo 401ks, and it'll be your solo 401ks, simple IRAs, SEPs. But those are things that if I put 20 grand into it today, I didn't pay taxes on it. All I did was put it into the retirement account. So it's going to reduce the amount of profit I have in the business. So I just took out, it's a $20,000 expense. However, when I get ready to retire at my retirement age and I pull from that account, then I'm going to be paying on the taxes then.
So you're still going to pay the tax?
Still going to pay the tax.
So there's no way to escape this?
There's no way to escape paying taxes at all. It's just a game of figuring out how to reduce our taxes as much as possible. Except for the fact that if I was to do this at a high rate, real estate will be the thing that will get you to mitigate paying no taxes based off how depreciation works.
Explain that.
So depreciation is the life use of a thing. So let's just say we got a camera. Let's just say with the camera equipment, the IRS says that the life use of this camera is 5 years, right? If the camera costs me $5,000 to purchase, I can depreciate that $5,000. So I'm gonna spend $5,000 today, but I'm gonna spread the expense out over 5 years. And it allows me to take the expense on my taxes like dollar for dollar to reduce my taxes by whatever that $5,000 is.
Before you keep going, what you mean, like spread it out over 5 years? I can write it off every year,
right? For 5 years. But the $5,000, you take the $5,000 and divide it by 5.
Okay, so I'll write off $1,000 this year.
Right.
Okay.
Right. 100%. So every year you'll write off $1,000. So and those are small numbers. So if you do that with the real estate, you have to think about it. With real estate, I get to get a loan to purchase a house, $400,000 house, and I'm renting it out. It's definitely got to be investment type home. So I'm renting it out or Airbnb in it, whatever it is. The life use of a residential property for real estate is 27 and a half years. So if I take a $500,000 house and divide that over 27 and a half years, you get to depreciate that every year for 27 and a half years. And that's just one house. So if I do 10, 15, 20 in any given year, whatever earned money I got, whatever profits I'm going to have at the end of the year, $100,000, $200,000, $50,000, we get to basically wipe that away.